Momentum indicators help traders understand how strong or weak a price movement really is. Instead of just seeing where price is going, we ask, can it keep going? In this lesson, we'll explore two powerful tools, RSI and MACD. Let's break them down. What is RSI? The Relative Strength Index, or RSI, measures recent price movements to show if an asset is overbought or oversold. It's plotted on a scale from 0 to 100. When RSI is above 70, it means the asset is likely overbought. When RSI is below 30, it may be oversold. RSI helps you spot potential reversals, especially during pullbacks or rallies. But remember, overbought doesn't mean sell now, and oversold doesn't mean buy right away. Always consider the market trend. What is MACD? The MACD, or Moving Average Convergence Divergence, shows how two moving averages interact, helping confirm trend direction and momentum. It has three key parts: the MACD line, the signal line, and the histogram. When the MACD line crosses above the signal line, it's a buy signal. When it crosses below, it's a sell signal. The histogram reflects momentum. If it's growing, the trend is strengthening. If it's shrinking, the trend is losing steam. RSI versus MACD. When to use each. So which one should you use? RSI is great for spotting quick reversals. MACD is better for confirming a trend before entering. But the most common and effective approach is to use them together. Common mistakes. Here are 3 mistakes to watch out for. Buying just because RSI hits 30, without checking the overall trend. Reacting too quickly to MACD crossovers, especially during sideways markets. Using default settings blindly, without adjusting to your trading time frame. Always combine indicators with price action and market context. Conclusion. To wrap it up, use RSI to spot when the market may be overbought or oversold. Use MACD to confirm trend direction and momentum. And most importantly, combine both tools for stronger, more reliable signals. These indicators help you move beyond just watching price. They help you understand what the market is really feeling.